Hi, I'm Mr. Simons, and I just wanted to give you a quick update as to what's been happening in the US economy. Now, the American economy is so important in the context of the world economy that changes in the US will affect other countries, Australia, as well as the global economy. So, the first thing to mention is that as of July 2019, the American economy has been growing for 121 consecutive months. That's right, 121 consecutive months. So going back to June 2009, the American economy has been recording positive growth every year. Now, it's important to note that that growth hasn't always been very strong, that there have been patches in which growth has been relatively weaker compared to other periods, but still, this is the largest run of expansion that the American economy has ever experienced. So this is really important because America's positive growth going back to June 2009, so shortly after that global financial crisis period, has provided a lot of support to global economic growth. The second thing to note is that in the American economy, unemployment is at a 50-year low as of June 2019 at 3.7%. So that is a very low rate of unemployment in the economy, which means that there is some strength in that labour market. Now, in terms of the kind of true state of the labour market, there are always some sorts of issues to probe down and look deeper. But in sort of a macro overall perspective, we've got ongoing growth and we've got very low unemployment, the 50-year low levels. Now, usually when you would see growth going at a positive rate and then you would see unemployment coming down or at the very low levels, you might expect inflation to be on the rise. But actually, in the American economy, well, like with the Australian economy, inflation pressures are quite subdued. In fact, that in June 2019, inflation in America is only 1.6%. So a relatively low level in terms of the economy. So we've got ongoing growth, we've got unemployment at record lows, and we've got subdued inflation. So what could possibly go wrong? Okay, so the US Federal Reserve, which is America's equivalent of the Reserve Bank of Australia, so the US Federal Reserve, also called the Fed by economists, they deal with monetary policy, that the Fed has warned that America could face cross currents, so sort of winds moving in different directions that could pose risks to the economy. And the main one they talk about is this trade war between America and China. Now, the Fed's concern is that if America is putting tariffs on Chinese goods and China is putting tariffs on American goods in retaliation, that will affect the American economy because American exports will be more expensive at the tariff price, less competitive, they will be sold less, American exporters will earn less revenue, less income, less jobs in those industries, and a reduced rate of aggregate demand, which could then slow growth in the American economy. So that's a big risk because exports are such a driver of aggregate demand, and anything that would reduce those sales of exports could then lead to lower growth overall for America. The other thing to think about with the trade war is this, what the International Monetary Fund, the IMF, calls the ripple effect. And if you think about a ripple effect where you get a really large rock and you drop it into a lake or a body of water and the kind of ripples spread outwards, that the ripple effect of the trade war could be lower overall global growth. And this kind of makes sense because if you think about how interconnected all parts of the global economy are. So if America slows or China slows, they're putting tariffs on each other in retaliation, then that's likely to lead to lower overall global economic growth, which will then affect countries such as Australia. So in terms of looking ahead, what is likely to happen to the American economy? Well, it's a good question that many economists are starting to come around to this idea that there will be one maybe even 2 rate cuts by the Fed in America during the rest of 2019 to really accelerate the economy and to drive aggregate demand in the face of some of the challenges that the economy is experiencing. At the moment, as of July 2019, the official Fed funds rate, which is the equivalent of the cash rate, is 2.5%. So if that comes down by 25 basis points, 50 basis points to 2%, that is really evidence that the Fed is trying to accelerate economic growth given some of the challenges that are being experienced in the US economy. Okay, anyway, hopefully this was a very useful update about the American economy. Things may change over the next couple of months, so do check back in. Leave any questions in the comments, always good to hear from the viewers. And as always, thanks for watching.